sell all the gold and convert it to Bitcoin. The gold is going to continue to lose power over time. It's not appreciating. There's no way that gold is going to go up in value by a factor of 100. It just won't do it. It's a dead rock. If Turkey sold the 50 billion in gold and they bought 50 billion in Bitcoin, Bitcoin would appreciate in value by a factor of 3, 4, 5, 6. I'll give you one more example. This is real, right in front of our face right now. Turkey.
Yeah.
Struggling with the problem. Their currency has lost 96% of its value in the last 20 years. It's collapsing in front of our face. They have a problem. They're running a deficit of 20 to 40 billion dollars a year. They've got $50 billion of gold. How do you solve the problem? Simple. Sell all the gold and convert it to Bitcoin. The gold is going to continue to lose power over time. It's not appreciating. There's no way that gold is going to go up in value by a factor of 100. It just won't do it. It's a dead rock. If Turkey sold the 50 billion in gold and they bought 50 billion in Bitcoin, Bitcoin would appreciate in value by a factor of 3, 4, 5, 6. Everybody in the world would start to realize that their gold is a dead rock, and they would sell first billions, then tens of billions, then hundreds of billions, then trillions of dollars of gold. The $12 trillion of energy or capital in gold would probably get demonetized down to about 2 trillion, because that's the utility value of gold as jewelry. Bitcoin would explode from 500 billion to trillions to 10 trillion to 20 trillion. Turkey would be sitting on top of first $250 billion of Bitcoin, but that's going to appreciate at anywhere from 10 to 20% a year. So Turkey would end up generating $50 billion of asset gains a year, which would offset their $20 to $40 billion deficit they're running. Their currency would be backed by Bitcoin. If gold was enough to back the currency, the lira wouldn't be crashing right now. Gold is an idea for the 19th century. And it was the best idea for sound money in the 19th century. But in the 21st century, the problem with gold is people keep making more of it. It's just the king commodity, but commodities don't make good money, because ultimately the problem with it is you can keep making more of it, and the bankers keep rehypothecating it, and they print too much paper gold. If you want to defeat both of those defects, you need to make it possible to self-custody, and you need to eliminate the creation of more of it. And Bitcoin does both of those things. So you want to solve the problems of an entire country? You strap your entire economy onto Bitcoin. If Turkey were to sell the gold and buy Bitcoin, they would create two virtuous cycles. They would cause every other country to start selling their gold, and gold would get shredded down to 2 trillion, and Bitcoin would leap up to 25 trillion. They would also create an avalanche of other mid-sized and small countries buying Bitcoin. They would also create an avalanche of investors like the George Soroses of the world buying Bitcoin. Bitcoin would expand to be worth 10 trillion and then 100 trillion. Everyone that moves first ends up with a currency backed by Bitcoin. They actually solved the problem for all the people in the nation. They solved their own problem. They fixed the currency problem in the world. They can still keep the lira. The lira is now just backed by something much better. And they would save all the companies in Turkey as well, and solve a whole set of other human misery issues. Now, who can do this? A family can do it. If your family did it in Turkey right now, you're in good shape. You're fine. If you've actually converted your assets to Bitcoin and you've taken custody or put it with a custodian outside of the country that you trust, you'll probably be okay. My company did it, Dominic. My company basically, we converted our balance sheet from cash and dollars to Bitcoin, and our market cap increased by a factor of 4. Our stock outperformed NASDAQ, the S&P index, bonds, gold, real estate, silver, everything. Our stock even outperformed Bitcoin for that matter. And so we actually converted ourselves to a Bitcoin standard. And we even, we got to the point where we sold $1 billion of stock, issued $1 billion of stock at a price which was 5x the price of the stock when we started buying the Bitcoin. Mm-hmm. So we were able to issue the stock and convert the stock into Bitcoin and put billions of dollars of assets on our balance sheet. So it becomes a very virtuous cycle. So that works for the early adopters. It won't work for the last country to adopt the Bitcoin standard. But it's kind of like if you're an African nation and you're using glass beads as money, and someone comes along with gold as money, and if you're the first person to figure out that you should sell your glass beads and you should buy the gold, then the glass beads are going to go to zero and the gold is going to appreciate, and you're going to own all of the stuff in that part of the world because you adopted the stronger money. Just like people that adopted gold instead of silver. When there's a new monetary system that comes along, if you were using the lira or the peso and the dollar became the world reserve currency, if you converted all your assets to the dollar, well, the dollar is appreciated to be worth 480 pesos from 1 peso. So if you converted your million pesos to dollars, you've got 480 million pesos now. And the person that didn't convert to the dollar has 1 million pesos, and you're 500 times richer than them. So this dynamic is going on all the time in the world. You just have to figure out what is the strong asset and what is the weak asset. And in a free market, the capital is going to flow from the weakest asset to the strongest asset. And if you get ahead of that dynamic, then your family, your company, your institution, or your country will benefit. And if you get behind it, you're going to be the African nation that had the treasury of $87 worth of glass beads, which goes to zero. And people wake up and they're like, well, you were the richest guy on this island.
I'm sure you will have riled them with your heinous arguments, but I don't want to get into an argument about the merits of both. I'm a kind of own a bit of both guy. But coming back, Michael, we talked about the three drivers of the bull market, the next bull market. And we've covered corporate buying, and I think we've covered the corporate buying was the second driver. The first driver was just the amount of capital there is in the world and where it's looking for a home.
Third is technology, digital money. So right now we have analog money based on 20th century rails, and all of the money moves on credit networks, the Visa, the MasterCard network, through central banks and correspondent banks. So if I have $100 and I want to move it 40 times, it takes about 6 weeks to settle each time. So it's going to take years, 4-6 years, to move it 40 times. And you lose 2.5% of it in transaction fees every time it moves. So if I wanted to move the money 40 times, all the money's gone. It gets, all the money gets eaten by the banking system, and it takes 6 years. So that's the existing status quo. So money moves too slow. It's too expensive. The impedance is too much. So you can't do things like give incentives to the people that do business with you online. If I'm Amazon and I want you to buy my book, read the book, write a book review, and then give you a reward when people like the book review or buy the book after reading your book review, I can't do that with a credit network, with a credit card, because there's a minimum fee, $2, $5. It takes 30 days to settle. There's going to be fraud. It's going to be a massive transaction fee. It's just too much impedance. So the real breakthrough of digital money is I can actually put millions of dollars of Bitcoin on a network, and then I can move it to you with Lightning, and I could move you a nickel worth of Bitcoin on the Lightning network for 1/30 of a penny in 1 second. And so I can move money. Instead of charging you 250 basis points, I can charge you something like 1/100th of a basis point. So it's going to be 1,000 times cheaper, 10,000 times cheaper in transaction fees, maybe 1,000,000 times cheaper. And instead of taking 60 days to settle the transaction, I can do it in about 1 second. And so the real interesting appeal of the idea of a digital monetary network is 100 million companies can do business with each other, doing billions of transactions an hour for the benefit of 8 billion people, settling in a second on a smartphone. Instead of spending $100 million in digital marketing and giving it to Google or Facebook in order to buy advertising, I could actually just stream the $100 million directly to my prospects or to my customers or to my partners in real time. Like maybe I want the attention of neurosurgeons in London. Well, I could actually set up a system where I pay neurosurgeons in London $10 an hour for their attention if they go through a process to identify themselves. I set up the wallets, and I'm very directly giving an incentive to the neurosurgeon. I'm not paying Google to buy the neurosurgeon search term on Google and then hoping that the person that does that is my target customer. So that you can rethink products, rethink services, rethink marketing campaigns if you jump through my gates. That's something that's not really practical today with credit cards, but you can do it with a split second with digital money.